Well, thank you for having me here. Well, first of all, I think there is a strong momentum overall, both in the Norwegian economy, but also in the bank. We're seeing a strong performance across the board in all customer segments, where we're seeing increased customer activity everywhere. In personal customers, there is an uptick in activity. We have loan growth of 0.8%. Business corporates Norway, continued strong momentum even there. And in the large corporate sector, we see a very strong loan growth of 4.7% in a lot of interesting industries that we pointed to before in terms of having a growth platform, both outside of Norway, but also in Norway related to, in particular, renewable energy.
That's really good to hear that not only are you at the bank doing well, but also that the underlying economy is doing well, despite the fact that the Norwegian bank is not joining in the global party on cutting rates. Does Norway then, ergo, not need a rate cut?
Well, I think if you're looking at where we stand today, the economy continues to perform well, as mentioned. You see unemployment levels at very low levels, 2%. Real wages are starting to increase. The customers' household spending is increasing as well, quarter on quarter. And therefore, if you look at the momentum and the growth in the economy as such, it doesn't seem like the higher interest rate has put a strain on either the corporate banking sector or the personal customers. So I believe the Norwegian Central Bank has been quite clear on having higher interest rates for longer and also being stable at 4.5% today, starting to potentially decrease it in March next year, but then gradually, slowly come down. And I think the Norwegian Central Bank has been increasingly clear on also supporting the Norwegian kroner going forward, which of course has depreciated somewhat over the past few years. And therefore, the relatively increased interest rate is important here as well.
Ida, I think our viewers would love to know what is different about the Norwegian economy to A, the rest of Scandinavia, and B, the rest of mainland Europe, and again, perhaps the Western world. Because yes, Norway is stunningly rich in hydrocarbons, but that can't, or can it, account for the difference in the strength that you've been talking about in those first two answers compared with the weaknesses we've seen across Scandinavia and Europe?
Well, I think one of the most important things is that Norwegians, both personal customers but also corporates, are used to paying interest on their loans. We had a zero key policy rate for a year, a bit more than a year, but not more than that. Before that, we came from a key policy rate of 150 basis points, and before that, even higher. So paying interest on our mortgages as well as on our overall loans in the corporate sector is not unknown. So just kind of bringing it up to the level where we are today. Of course, this is higher than what we've seen historically, but not to the extent that it's a strain. In addition to that, people in Norway, or the personal customers, are used to amortize on their loan. And we are amortizing quite a lot on our loans on a regular basis. So, of course, that has also been a mitigating factor in sense of increasing interest rates, but also being able to decrease the pace of amortization without kind of leading that to no amortization. People are still amortizing on their loans, but the annuity structure means that that's kind of more of a balancing act between interest rates and amortization.